Fund Supermart, your online gateway to unit trusts.
Today, we have Mr. Reginald Tan and Mr. Vafa Ahmadi here with us to talk about the Amundi Asian Silver Age Fund. Vafa, could you tell us more about your investment philosophy and strategy?
Yes, hello, with pleasure. According to our studies, those we undertook 6 years ago, aging appeared to us as being the most powerful, most permanent, less cyclical thematics in the market. And therefore, it appeared as being an excellent proxy to build an investment case upon. And therefore, we went through different sectors which were positively impacted by the theme of aging, and we came to the conclusion once again that there were much more to aging than only healthcare or dependency or daycare that usually people think of. And that was the original point, the beginning point of a multi-sector fund which has been launched some time ago actually. And our standpoint is that of the consumer, and what we target here is the consumption propensity of the aging population here. So basically, this strategy relies on the sectors which are being positively impacted throughout the world through aging spendings.
Hi Reginald, could you tell us what are some of the demographic trends that you have identified, and how have you positioned this fund in light of these trends?
Sure. Yes, hi. Glad to be here. Our approach towards the Silver Age phenomenon is that this is a global trend. This is a Geiger trend that goes on, and it's permanent, and it's actually irreversible. So for us, we want to be positioned in a sector that is safe, where we know growth is here to stay. And from the Asian perspective, what we see is that the growth rate here is actually faster compared to the rest of the world. By that, what I mean is that the proportion of seniors aged 60 and above is growing at a faster rate, let's say more than double, over the next 30, 40 years, whereas in Europe or in the US, it's closer to 40%, thereabouts. So for us, this is where we want to be, and we like this trend, and this is where we want to be positioned within Asia.
What are some of the countries and sectors that you have identified to benefit from the dynamics of an aging population?
For us, our approach to the Silver Age phenomenon is that there are 8 specific sectors that we consider that will benefit from the silver dollar, if you will. The 8 sectors are well-being, leisure, security, autos, asset gatherers, pharmaceuticals, healthcare equipment, and dependency. These can be categorized into spending which the seniors would have when they have, for example, retired, and they have paid off their mortgages, and they have sent their kids away, and so they have more money to spend. So in those years, they would be spending more perhaps on travel, skincare. Beyond that, of course, we do go into medical dependency areas, pharmaceuticals, hospitals, etc. So there are many components to the spending, the silver economy, and we have to also emphasize that this is not simply a healthcare fund. It's more to it than that.
Vafa, do you have anything to add on to that?
Well, the thematic is a global one. It's a European one. It's Asian one, if I can say, because in Asia we have lower average when it comes in terms of aging, but we're aging much faster than the rest of the world. So it's a global phenomenon. So when we speak about, let's say, which sectors, which countries, I will prefer, if you will, to concentrate on those sectors which are most impacted by the aging. The first one being leisure and lifestyle, the second one being well-being, the third one asset gathering. Automobile is a very good sector because except for China, 55% of all new cars which are being sold in the world are being sold to people beyond 52 years old. And every year the average is growing. As for the elderly segment of the market, people beyond 80 years old, we have other emerging needs. Of course, they don't travel, they don't buy cars, but they need daycare, personal care, security, pharmaceuticals, and medtech. So basically, 8 different sectors which we have identified, which we consider as being, once again, positively impacted and exposed to the theme of aging.
How is the portfolio being constructed in terms of country and sector exposure?
Well, the way we construct our portfolio is the way we consider the best suited to a given market in order to maximize the performance perspective. So it's a very, very flexible, within the equity world, if I can say, flexible way of doing things. We listen to the market. We try to understand what market dynamics are actually prevailing at a certain moment. And I will not go through each and every sector or each and every country, but we try to make the best of this thematic, given the fact that this thematic by itself is a powerful, strong one. And the only thing we're left with is to how to make the maximum of it. And that's what we're trying to do through our geographical allocation and through our sector allocation. Stock picking being another very important part of our business. Basically, once again, try to maximize our perspective of performance.
How do you select companies for your portfolio?
Well, it's very much from a bottom-up perspective, and really it is a case of where we see the most value. The other thing to consider, of course, is where we are in the market cycle today. Asian stock markets actually are very cheap. At the end of last month, September 2015, we were actually not too far in terms of valuations from the lows of the global financial crisis. So that's one thing to consider. There are lots of opportunities out there from a valuation perspective. The other thing, of course, is to see that there is growth in the sectors that we like and that we are not overpaying. And so I think it really is very, very bottom-up driven. We like the hospitals, but they could be a little bit more expensive. We like the pharmaceuticals. They also could be a little bit more expensive, but of course that's for certainty of growth. In terms of countries, China has been hard hit over the last couple of months for various reasons, and we see some value there as well. But generally speaking, I think where we are comfortable with is the fact that the growth is secure for the next many years. And so this is, again, like I said, this is a sector that we like.
Last but not least, Reginald, are thematic funds for everyone? How does the fund compare to a generic Asia x Japan equity fund?
Well, I think that thematics, if you want to call it that, sometimes have the connotation of being come and go type funds. So from our perspective, this is much more than that. This is a permanent Geiger trend. So for us, this is something that you want to be positioned. You may or may not want to compare it to a generic fund because there are segments of it that will not be captured in this fund. So obviously we don't have telecoms, we don't have technology, we don't have utilities. But that's because this is where how the fund is defined, but also very clearly this is where we see the growth to be for the future. So again, valuations are not expensive, and so I think this is generally where you do want to be positioned for the future. And as I said much earlier, the growth is also very much in place and even higher compared to the rest of the world. So I think our position is very clear on this thematic.
And over to you, Vafa. What are your thoughts on this?
Well, thematic fund is for everyone as long as we understand risks associated to it. Since we are not managing a plain vanilla, as you mentioned, fund which invests in every single sector available in the market, and we're targeting a certain part of the market, so we're not investing on everything. And if the part in which we are not investing outperforms for some time, we will have difficulties outperforming the market. So our clients, our investors have to bear this in mind that performances in a thematic fund may diverge for a certain time from the index. And this is the very contrary of an ETF, for example. What we do here is to capitalize on a permanent source of growth, and we try to bring alpha to our investors. So they have to understand that for some time, we might diverge from the index, so we're not tracking one. As long as we understand, basic risk associated to this kind of fund called thematic investing, I think thematic investing is for everyone.
Thank you very much.
Thank you very much.